Oh man, rate cuts. Jerome Powell has just delivered a New Year's gift for markets. Bitcoin here, up almost 3% here on the day, bouncing off its daily EMA ribbon. But Jerome Powell has given us a big gift. Now, first and foremost, markets were expecting a rate pause. We did get that pause, but as I mentioned before the FOMC meeting, we have to look at the summary of economic projections, and it's this number right here which changes everything for this market. I'm going to break down exactly what Jerome Powell just said, what implication this has for the Bitcoin price and the wider markets moving forward. As always, smash your likes. Do not forget to subscribe. Check out the links in the description to Bybit. I use Bybit to trade, guys, and also jump into our Telegram group, ijazcrypto.com/TG. I hope to see a bunch of you guys in there. Thank you to those guys who watched the live stream with me, but for those who didn't manage to listen to an hour of Jerome Powell waffling, we get to get the summary video here. So I'm going to break it down for you guys, and this number is the key number. If you take a look at where this was at, this was sitting at 5.1% on the last projection. Now, what happened was we are now sitting at 5.25 to end the year, right? So imagine we're sitting at 5.25. Market participants were expecting that at some point next year, remember, look, March of next year, this market is saying 58% of the market says we're going to get at least one rate cut by March. They think the first one's happening in March, right? But now, finally, from the Fed officials themselves, you can see that by the end of 2024, the median projection is that we will be at 4.6. To go from 5.25 to 4.6 suggests 3 rate cuts of 25 basis points. That is 75 basis points of rate cuts. Now, we can also take a quick look here at the dot plot. This is where each dot represents one Fed official voting about where they see rate hikes. And you can see by 2024, the majority of participants here, take this chunk here, see us below 5%, with the vast majority sitting here at least 4.75 or lower. So this is really, really bullish here in the market. If you listen to Jerome Powell's press conference as well, he came across very, very dovish. He was almost, kind of being apologetic at times. Now, yes, of course, he said his standard lines. We still have a long way to go. We got to get inflation down. I get that. But you can see here that he was not trying to jawbone. He was not trying to be over aggressive with the markets like we've seen numerous times here over the last 12 to 18 months. It's the softest I've seen him. And you can see he even said statements such as, we think this is the peak. We think we might not see another rate hike. Of course, he's prepared to do another one, but we might not see another one. And you can see here his Fed officials are also expecting that. We've seen inflation moving to the downside. Today we also got the PPI inflation, which shows that it came down lower than expected as well. So things are trending in the right direction heading into 2024. And doesn't the market know it? Doesn't the market know it that already we've seen a huge move here in just the last couple of weeks, from 15th of October to where we're at now? You can see Bitcoin is up over 58%, but this could just be the start. We are so back, guys. You saw Andrew Tate say it in terms of what he's covering on his channel, but we are so back in terms of risk rotating on, and that's what I'm focused on here right now. You can see here dollar index getting powerfully rejected from its daily EMA ribbon. This is very good. This is a very good rejection here on the dollar index, and hopefully we can continue to do the same on the weekly, right? Send it down in this direction of this yellow line. That is exactly what we want here. And remember, why would this be going down? Why would the 2-year government bond be going down? Why would the 10-year be going down? It's going down because nobody wants to be in the dollar. Nobody wants to be in those boring government bonds anymore. They've been in them for 12 to 18 months through the bear market, and now they want some yield. Now they want to be in Bitcoin. Now they want to be in NASDAQ and growth stocks. Now they want to even be in those altcoins to get those returns. And that's what we're seeing here in the market. Now, the double-edged sword is this. If the market gets excited like we are now, if prices start to move to the upside, will that cause inflation to rear its head again? And this is why Jerome Powell has to tread very, very carefully next year. But to many extents now, the genie's out of the bag. Even if Jerome Powell tried to jawbone markets today and be very, very hawkish, markets were not having it. Markets are in a buoyant mood. They can see the data. They're not dummies, right? They can see inflation coming to the downside. They can see the labor market starting to soften, and they're feeling positive, right? They see that this is the final innings of the rate hiking cycle, like we've said for a very, very long time, and they're getting themselves set up for a big move to the upside. So what are we seeing here on the shorter time frame? What are we seeing here in terms of the immediate levels here for Bitcoin? Well, first and foremost, you guys know we were in this pattern, right? We were in this symmetrical triangle pattern for Bitcoin, which broke to the downside. Now, it's very normal to get these type of situations occur. If I show you this on the 4-hourly, it's very normal on these types of pattern for these to break to the downside, liquidate everyone, and then go on a big run back up towards 45. And that's what I'm looking at here for now. Was this just an opportunity to buy the dip? And is Bitcoin now ready, armed with the new news that Fed officials are looking to start their rate cuts next year to start moving to the upside? Now, the other thing worth commenting on is that when the Fed officials have kind of admitted that, oh, look, we're going to do 75 base point rate cuts next year, chances are they could do many more. Chances are they could do 100 base points, 125, 150, as in January and February, we start to get more data. If we see more data, inflation's coming to the downside, we could be getting a really powerful year of rate cuts next year. Of course, data dependent. Now, we can also see fear and greed is sitting at 65. This market is quite greedy, and no doubt when this refreshes tomorrow, it probably notches up a little bit more, given Jerome Powell and the data that is coming out. So let's see what the markets are expecting. They're expecting a rate cut in March. If we jump on over to May, they think we'll get another rate cut in May. That's 50 basis points. They then think, so let me just go back there. They then think we're going to get another one in June, and that will be your 75 basis points. But the market thinks you're going to get more. In fact, if I go all the way to December of 2024, majority of the market, I know it's like mainly concentrated here, right? If we take this, 3.75 to 4. They're expecting a lot, guys. So this market is expecting that we will lose 1.5%, okay, 150 basis points in cuts next year. Now, if you take the upper limit, they're expecting a little bit less cuts, and even this 20% here expecting 175 basis points, right? So the market is expecting an aggressive year of rate cuts next year, and that is fueling the move to the upside, and that is the Christmas gift that Jerome Powell has given the market. Now, what are the key risks here? What am I looking to do? Well, currently, what I'm looking to do is be very, very patient, right? We had an opportunity to buy here on the test of the EMA ribbon. And the question now is that enough? Is that enough of a test for Bitcoin? And will Bitcoin now start to pump its way up towards 45? And it's very important that it goes beyond, right? Where we got rejected here at 45,000, where my cursor is, it's very important that when Bitcoin bounces here, it bounces straight through there. We cannot risk a lower high here. We need a higher high. Very important that we get a higher high and then trend our way to the upside if we want to get to that 50k level before the end of the year. So very, very important news we've just been delivered. Other news I do want to share with you guys, which I don't want you guys to kind of miss, is this. BlackRock's Bitcoin ETF now invites participation from Wall Street banks. So basically, very quickly, guys, BlackRock has changed the mechanism to allow APs, which is basically allowing banks, Wall Street banks like JP Morgan, Goldman Sachs, to create new shares in the ETF fund once it gets approved, because BlackRock know it's going to get approved, in cash rather than in crypto, because many of these banks don't hold crypto. So it's allowing them to get exposure to the ETF using the cash on their balance sheet. Really, really positive, and that news has been looked over today given the FOMC. The other news I wanted to share with you guys, let's see if I can find it, is this one, the FASB accounting rule. Michael Saylor has been banging the drum about this for a very, very long time. Up until now, the regulation here for the US accounting rules has meant that if you hold Bitcoin, you cannot write it up. If it goes into profit, you cannot show that profit on your balance sheet. But if it goes into a loss, you have to show it. So unfair. And Michael Saylor has been banging the drum, and finally we're getting this approved now that you can write it up in a fair way. Hugely positive. It means more companies will be more likely to hold Bitcoin. Remember, Tesla held Bitcoin, right? A lot of it. And I think they still have a little bit. But, it was unfair for them to have to write it down, which makes their accounts look bad, makes their earnings look bad. Shareholders don't like it, right? It's not a good look for them. So now this makes it a lot easier for corporates to hold Bitcoin. And ultimately, that's where we're at now, guys. I need you to look at this and go, hang on. Things are looking really, really positive right now. We're in a situation where inflation's coming to the downside. We've just had Jerome Powell, like I have been saying for a while, coming out and giving this light at the end of the tunnel talk, being very dovish, talking about the fact that we will be getting some rate cuts. The Fed officials have said it, 75 basis points of rate cuts they're projecting next year. Probably there'll be more. If inflation comes down, probably there'll be more, right? Institutions trying to front run and get into crypto. BlackRock trying to get their spot ETF, right? These accounting rule changes to allow it to make it easier for corporates to hold Bitcoin. This is all starting to lead up to a nice, powerful bull market. Let me know, guys, how do you guys feel about this market? Are you feeling positive? Are you feeling negative? Do you wish you had some more time to buy some more? Either way, guys, make sure you're in our Telegram community, ijazcrypto.com/TG. Thanks for watching, and I'll see you in the next one.